Well, let's move on then. The cement space has been buzzing around. Pricing has improved. Demand on ground, we understand, by a lot of brokerages like Jefferies. They have written that demand is improving and input costs are cooling off. Well, looks like an ideal scenario, right? So understand that and more. We're joined by Mr. Anil Singhvi, Executive Chairman of Shree Digvijay Cement. And then we'll be joined by Rajesh Ravi, Institutional Research Analyst at HDFC Securities as well. Hi, Mr. Singhvi. Good to have you on the show after a while. Well, is demand bouncing back to the extent that you expected? October, November should be looked together because you had festive season, in different parts of both these 2 years. That's 2021 and 22. And also for your company, earlier you were guiding for around a 10% volume growth. You stick to that because first half has been soft.
Thanks, Nigel. Thanks for having me today on your show. Two things. One is, of course, the demand is picking up. One has to take October and November together because last year the Diwali was in November and this year Diwali was in October. So if I take the two together, I'm very, very happy that demand is really now perking up. November especially was very, very good, which is really boding well for demand to go on till about May or June before the monsoon. So I think we'll be growing much better than what even I was expecting in September. September was looking a little subdued because demand was just not coming into the double digit. But from now on, I think the demand will be double digit till at least May or June. As far as Digvijay is concerned, we have had a very good last month. Demand was very good in Saurashtra and in Gujarat per se. So I think happy days are here again as far as demand is concerned.
And happy days in terms of profitability as well. Mr. Singhvi, hi, good morning.
Hi.
Because you got petcoke prices which are coming off. On the input side as well, inflation side as well, are things looking a little more reasonable now?
Well, there's some softening of the petcoke and coal prices, but one doesn't know. I would still not bet on that the prices are, secularly going to go down. But definitely they are looking, much softer than what they looked in June, July. I hope there is a bit more clarity on the pricing of petcoke and coal. Oil, of course, is coming off. So I believe that petcoke also will come off. And once petcoke comes off, I think coal will come off. So I think it's going to be a cascading effect. But I think it's early days for us to count on really softening of the prices in a big way. 5-10% decrease is not going to really help us so much. But on the flip side, I think we need to look at it how the demand will perk up the cement prices. Cement prices have been subdued. In fact, they have been tracking much lower than inflation for the last 12 months.
Mr. Singhvi, good morning. I just had one follow-up question on demand because, you have your ear to the ground, you know how things are moving. Is this demand coming in from a lot of the government capex? Are you looking at a big pickup in private capex? Is it more infrastructure demand, real estate? Just trying to get some color on where things are moving.
Sonia, I think let me put it in perspective. I think it's coming from all sectors, still governed by largely on account of real estate, whether individual or institutional. And the secondary infrastructure also is picking up. I think we are getting into a little bit of a confidence mode, if I may use that word, whether it is be government or the individual or institutional consumption on that. I think even the government point of view, the GST collections, the tax collections, I think things are looking up much better for them to start spending money. So is the capex cycle for the private sector. And individually, I think it's also a reflection of how you see the economy. Okay. I think we were looking very, very dangerously in June, July, because inflation was looking to be a big threat. But I think those threats are really coming off. And cement, as you know, is a long-term perspective. It's not a 1 month consumption or 2 months consumption. So once you start a house, you don't stop it. But you start a house after taking into consideration many aspects. Okay. So I think this is where I believe that the demand will be here to stay.
Okay, all right. Mr. Singhvi, just to get a couple of numbers, the volume growth will be 10% and EBITDA per ton will trend how much higher? Last quarter was around 600 rupees per ton. So how do you see this shaping up?
I don't think I've ever spoken on future as a believe that
on the volume front. So on the volume front, you told us you were expecting 10%. So at least you stick to that. On the profitability, it could be up in the air. But
yes, and I want to just put it is that September quarter was one of the worst quarter for the industry, though we did much better. 600 rupees was perhaps the first 4 or 5 cement players in the country because most of them did about 400 or 500. So 600 was pretty good, but I think according to me, that was the worst quarter I have seen in my recent memories on that. Going forward, I think the EBITDA per ton will be much better than what we did because it was high coal prices, demand being low, monsoon months, everything what could go wrong went wrong during September month. So
Oh, absolutely.
we are out of the perfect storm, I would say this way.
Okay, out of the storm is always a good thing. Rajesh, Ravi has been sitting by very patiently. Rajesh, thank you for your time. Can you give us your top stocks? What are the stocks that you're still bullish on since demand is picking up, and what are the target prices?
Yeah, hi, good morning. In terms of our topics, among cement majors, we are bullish on Ultratech and Dalmia Bharat. Even ACC valuations is cheap compared to where Ambuja is. So we prefer these companies, preferentially Ultratech followed by Dalmia. And in mid-cap space, we are bullish on JK Lakshmi and Nubuco.
Okay. All right. Hi, Rajesh. Morning. Give us a couple of numbers. What for the industry? What was the EBITDA per ton in Q2? As Mr. Singhvi said, it was one of the worst. And for the industry, what kind of an improvement on the EBITDA per ton you're factoring in for Q3 and then Q4?
Sure. So for the quarter gone by, the industry average was around 530 rupees EBITDA per ton, and as Mr. Anil Singhvi mentioned, it was obviously one of the worst quarter in the recent, I would say, obviously in at least 7-8 years, and things are obviously the industry for sure is out of storm, and in Q3 onwards there are multiple triggers as he also conquered that demand is holding up well, and that is where we believe that there should be at least 100 rupees improvement on the realization side sequentially. Additionally, on the costing side, if you look at the cost trends, from the peak of July and August, September, the coal prices, petcoke prices, all of them, primarily the coal prices, which were on a per kilocal basis north of 4 rupees, have now tapered down to closer to 3.5 rupees. And even imported coal, even the domestic imported coal prices have gone up in the last 2 months. They're
Yes.
still hovering around, less than 3 rupees.
Yes.
So 2.5 rupees. So what is happening is that coal and petcoke both are
Yeah.
converging closer to 2.5 rupees per kilocal, which is at least 1 rupee lower compared to what we have seen in the quarter gone by.
Yes.
However, will all of this will play out in Q3? Certainly not, because people have different inventories and then logistic challenges. So
Yeah.
yes, there will be some benefit. We are factoring in around 100 odd rupees saving, which should come through in this quarter, and then a major saving should be seen in Q4 and Q1.
Okay.
So these 2 quarters, Q3 and Q4, we should be, from an industry perspective, 200 odd rupees, 200 odd minimum margin improvement we should be factoring in Q3 from 530 levels, and in Q4 there should be at least 300 rupees margin improvement.
Okay, all right. So going by what you're saying, the industry EBITDA per ton will move from 530 closer to around 1,000 rupees per ton. Well, Mr. Singhvi,
Yes.
a final question before we let you go. When we last chatted, you told us in the next couple of months, maybe there will not be any consolidation. But in the coming quarters, you're expecting some consolidation. Have you picked up anything? Are you expecting something to take place in this fiscal itself? I'll tell you, I have my ear to the ground, and I believe that in the next month and a half or so, couple of assets could change hands. Smaller assets, relatively very, very small assets. But what's your sense?
Than I have because of the age factor. I'm much older than you, so obviously I can't hear the sound bell that you can hear. But definitely, I believe that the industry will go through some consolidation. It won't be in the hurry, as I mentioned to you.
Yes.
It may take time. Smaller assets, yes, they may go through because you don't require much of both the work to be done and much of the money to be spent on those. But definitely 23. So let me not put 1 or 2 quarters, but 2023, the full calendar year, you will see a lot of consolidation happening in cement industry.
Oh.
Because every positive factor is there. So now you don't have to worry about demand, about the pricing. And more or less, we are peaking out on in terms of cost of production. The cost of production will come down here on. So I think it's looking very, very good play, both from the point of investment values and for consumption.
Okay, Mr. Singhvi and Rajesh, thanks so much for stopping by. 2023 is shaping up very, very well as per what Mr. Singhvi and Rajesh as well says. Let's see whether or not that holds true, and maybe it could be a year of consolidation as well. But Sonia, let's get back to the markets. We went to around 18,570 and we have bounced 40-50 points, as was the call earlier today.
Oh, absolutely. And there are plenty of stocks that are moving around.